Alright, what's up everyone? Back again with another video for March 14th. And yeah, another weekly review. Last week wasn't too sure, which way the price was going to go, and it turns out it just moved like over $30 in a day. And, missed that one, and it kind of made me have to rethink the whole market landscape environment, whatever's going on. So I took some time off. I didn't really trade at all last week, but now I'm back with a very solid plan for the future. So let's see what we can figure out. First thing, first thing I'm looking at is the weekly chart. Um, it's imperative that you study the higher time frames because, I mean, if you're making trades for $10, that's cool, but you want to be hitting home runs. You want to get the $30, $40, $50 trades, and they all start on the higher time frames. So this is what we're looking at. We're looking at this on the weekly, this ICT bearish order block, and we notice, well, first off, about the weekly chart, we notice that price is going to kind of come up in here, kind of test these old highs. We were thinking, or at least I was thinking, that we were going to get at least to 315. I mean, you can see how significant of a level it is. And turns out we didn't even reach 315. We stopped at 300, another likely area of resistance, and then we dumped hard, kind of putting in a top on the weekly chart. Now, is it going to stay atop for long? That's to be seen. So we got to find more pieces of the puzzle. We see this is our weekly order block. It's right in the middle of some a big consolidation area, and that's no surprise. But then we also see this high on a daily chart. We bring that out, and we see all these wicks hitting up in that area. If we zoom out, we see that ICT order block bearish with this high, with all these wicks, and it looks like the support, well, once it was resistance, then it was support, and now it's looking like we're finding resistance. These two levels are so close together. What's this, 269 to 274, so $5. That, I mean, you might as well just call this confluence, right? This is basically one big area of fat resistance. So we are in resistance territory. We do seem to be putting in a top right here, and matching up against resistance in a bearish environment. I mean, this candle is pretty scary. Now, so as for what's going to happen this week, well, I got these support resistance, these red lines pre-drawn on there. So we see these are likely targets should price be going one way or the other. I'm going to say we're not going to break, like this week is going to be bearish. So we're not going to be taking out any highs. We're not going to be looking to take out 294 this week. I think if I'd say the upside objective for this week, which would have to happen really soon, would be to break through this resistance. And if we see that happen, then our next target would be these order blocks, this resistance level. It's the deep retracement, 79% fib level for the OTE short. 284 we could potentially see, but I'm looking to not looking to do that. Not looking to do that. All right, that's cool. I'm thinking if we don't break this resistance soon, if we don't get up here and get on top of this resistance within the next day or so, I'm going to be looking for some deep targets, and it might not get there this week, but this stands out pretty obviously. Just a basic harmonic pattern, the bull flag or the bear flag, And yeah, we see that potentially, if we do have a bear flag going, this is a potential target 225. I would be looking at 230 just because it's such a significant level. You see this consolidation all worked 230. And it kind of lines up within $5 of our harmonic pattern. And these are our levels. We would be looking to maybe hang up at 255, then ultimately 250, and then once that goes down to 230. And that's my next big plan for Bitcoin. A really good setup, I think. So yeah, that was pretty short. I think I just covered everything I wanted to cover. If we go up, we're looking to break this resistance, ultimately retrace. And then obviously if we broke here, our 315 target is still in play. But, you know, wouldn't surprise me to see 230 real soon. I think that we are up against resistance, and if this holds as resistance, we're going to start moving down. And we have some confluence pointing to 230 as the target. That's basically all I have to say about this week's price action. What else could I talk about? You know what? I'm just going to flip to a random page in this book that I'm reading. No, I've already read it, but Alright, we're just going to start reading. The daily mood ratings clearly showed that those traders who had more controlled emotional reactions to the market fared better in the profit and loss column. Of note, this result applied to both positive and negative emotions. That is, overall, significantly poor trading performance was seen in those traders who experienced either positive emotions after winning trades or negative emotions after losing trades. Nevertheless, the results from this very large study showed that low neuroticism had the highest correlation to successful investing. Well, whatever. That's from The Mental Edge in Trading by Larry Williams and his son. But I guess the way that I do that is by looking at the higher time frame and then making trading as boring as possible. It just keeps the anxiety out of it, keeps the neuroticism out of it, and you really don't want to be trading for fun. You don't want to be trading for excitement, because trading is designed to fuck with your head. So you just want to make it as boring as possible. If you're staring at 15-minute charts and you're watching your profit and loss tick up and down every second, and you're watching the candles on a 15-minute chart, they look like big, $100 candles, when really on a 15-minute chart, a candle looks big if it makes like a 30-cent move up, right? So all that is just really, that shit's just making you neurotic and anxious, and it's just fucking with you. And that's how people lose money, I think. And so, we're just looking at the weekly chart, and, we're just saying, okay, here's some levels on the weekly chart. This is where I want to trade. I think this is a high level of, you see this high here, you see this order block here, you say, well, we just retraced up into this significant level, and we failed and sold off. Now this is holding as resistance, so this is an area that I want to sell at. And that's basically all there is to it. I mean, obviously there's more to it, but if you're trying to, some money was made here if you could buy here and sell here. Some money was made here on this day, but really, if the range is $10 for a day, you have to be trading perfectly, and you have to just kind of stay too close to the markets. You should just be waiting for the choice setups. I mean, it doesn't take much to really pull a lot of money out of the market. You don't need to be trading every day. And yeah, I guess that's all I have to say. I'm looking for 230 soon. I think Bitcoin's gone back to being screwed. It's kind of like how I was talking about when we first broke out here. I said, the Bitcoin being on the New York Stock Exchange doesn't really matter. And ultimately, it it was just a weak pump, and now Bitcoin's back to sucking, at least for now. Maybe we'll go bullish, but for now it looks bearish. And that is the weekly forecast. Until next time, good luck, good trading.